Hello and welcome to Investors Hangout. This weekly interaction to help you learn and understand savings and investment issues is brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. Now, the Indian markets have been steady for most of the past year, but the last week was a little scary with over 6 days of bloodbath. So you should know how to deal with such times because market falls are inevitable. You should know what to do and what not to do. And to discuss that, we have with us Dhirendra Kumar. Welcome, Dhirendra.
Thank you.
Can you please explain to our investors what happened last week? What led to the market fall?
All that I'm going to say will look like an explanation, and I can well explain if it would not have happened. If the market would have gone up by 30% in 2 months' time, I'll give you an explanation for that. So after something happens, explaining it is a little simpler, or one can always invent a reason. But here the things looked pretty straightforward. Of course, the immediate thing was that most foreign investors, they panicked. They panicked, and it looked like tomorrow the world is coming to an end, and they have to pull out all the money from India. But this is something which is very usual. It happens every now and then. Markets are cyclical, and once in a while people panic. The reason that we can attribute is that, interest rates have been steadily going up in the US, and they will keep rising in the developed market, and that is why. And there was an imminent announcement, and that is one. The other is the inflation rising. Inflation rising because of the Gulf crisis, because of the escalating war, and that war escalating in a manner that will actually lead to disruption of the supply chain, that will lead to prices going up, and primarily oil prices. But why it happened on a given day?
Right.
Why it did not happen 2 weeks ago, or why it did not happen 5 days ago, or why it happened on that particular day? Because market, once such a thing happens, then it takes a life of its own. A lot of people actually, if some investors triggered or got panicked and pulled out money, then it led to a market fall. That led to a market fall which drove other people to pull out that, there must be something. And if it carries on for a couple of days, then the technicalities trigger in. That, there will be people who will be holding some securities, which will be derivatives, contracts. And they will panic that, they did not expect that there will be disruption in the steady rise in the market. So they will be squaring up their position in a hurry so that they are able to cut on their losses. And there could be an impending settlement. They would like to escape that. So all those, the stock traders, they run for cover because they did not expect. So any time there is a disruption in the usual movement that was happening, one, it is unanticipated, and second is that it can't be predicted. Third is that, it can lead to all kind of, it can linger for a period which we don't know.
Right.
So as I was telling that I can invent a reason, but these reasons can be invented even when the market goes up. But one important thing is that, lessons to take from this, and how to conduct yourself. I think those are more important questions. This is something which will keep happening.
All right. So what are the lessons that one should draw from this, and what should one do during such times?
So investing is a very positive action in terms of you are looking at having more in future, and that is why you're doing it. And then you suddenly realize that, it was steadily going up and you had more, and suddenly all that more is gone. And it happened in a hurry. So it's quite understandable that it will happen. And, people panic. But the point is that, if you panic, it doesn't help. Important thing is to relax, to understand that this happens. And what you can do, I think, you should do a couple of things. One is that switch off the TV. Because that only adds to because any other thing happens, you think it is happening to somebody else. When this market thing happens, it happens to you.
Right.
It happens to you too. Whether you have invested in an index fund or an Indian fund or an international fund or whatever. So that's one. The other is that, don't act in a haste. Don't act in a hurry, because it looks very tempting that, before it loses any further, let me take the money out and then I'll be sitting on cash. The problem is that if you succeed and the market falls even more sharply thereafter, it will become impossible for you to get in again. And very likely you will take your money out and market will start going up. Then it will again become very difficult for you to get in again. So I think it's very important to keep your cool and do nothing, and that is the time when you should be asking few things, which will help. Which is if you are investing for the long term, does it really matter? Is it going to really disturb or alter or completely alter your plans which you are planning next month or 3 months from now and so on and so forth? No. If it is for 10 years, 5 years, you will be faced with these situations 5, 7, 10 times more. Then comes, where does the risk come from? The risk primarily comes from the fact that if you don't know what is going on, then you will feel that it is very risky. Because if you did not know why it was going up, how can you know why it is going down? So you would like to, all you can do is, okay, it was going up, good. If it's going down, not good, let me run. And so it will be good to understand that why equities behave the way they do, why equities do well over a period of time. What you can do to reduce the real risk of your investment, which is not having diversified and not investing in equity, not preparing with your emergency fund, not preparing with your immediate needs. Because if you put your short-term money into that, you should panic. You should really panic.
Yeah.
But if you put your money which you are unlikely to need for a couple of years, why you should panic? So I think these are times to actually question that.
Like I was reading somewhere, play dead while during bear markets. So do nothing, and if it's your long-term money.
Ideally, yes. But if you put your short-term money, you will be dead. You don't have to act it. So, because if you have invested money in a market which you need 6 months from now, and bear market can linger for 3 years, so you will actually be dead.
Yeah. So what should you not do during such times?
Not sell in a hurry. Then not not sell in a panic. Then the other is that after it has gone down, a lot of people actually buy in a panic, that they think that they know that, okay, now it is done. That is also problematic, because what happens is you really don't know. And you are distracted from a methodical plan, because there is a real value of the plan, which helps you stick around for 5 year, 10 year, 15 year, 20 year.
If it's additional money, then there should not be any problem, no? If it's additional money that you're...
It is additional money, but the problem is that if you fall in habit of this, that you are keeping additional, yes, you should rebalance.
Right.
You should follow some method. But if you are trying to dabble into it, immediately it becomes speculation. Because then if you actually succeed by investing money at a lower rate, lower prices when the market has corrected, and if you succeed, then you will sell after it has gone up. Then, so you actually become a speculator or a punter from being an investor. Devise some method which is driving your actions. And the first method is to not invest short-term money. Then ensuring that you are diversified at all time. And then ensuring that you are doing it gradually. Right. Because any time you invest a large sum of money and you are faced with this panic, because the biggest problem is anybody who would have invested a large sum 2 weeks from
2 weeks,
2 weeks ago,
crash.
He will be in trouble.
Right.
And if more so, if you don't understand that, okay, this is a fairly regular phenomenon.
All right, so that's all we have for you in today's episode. Just be mindful that you don't buy in a panic, you don't sell in a panic, and this is a time probably to revisit your asset allocation. Keep watching this space for more information. If you like the show, do subscribe to our YouTube channel. Take care. Bye for now.